Hi, welcome to iReports here on CNN.com. I'm Kirsten Kloss. Thanks for watching. On today's program, our guest is Sheldon Wolf, a forensic credit expert with over 2 decades of experience in the field of credit restoration and improvement. Sheldon is also the president of Credit Slab and Canada Credit Fix. Well, today's Sheldon is here to uncover some of the myths and misconceptions surrounding your credit and how to rebuild it and improve your credit score. Well, Sheldon, it's great having you on the program today. Thanks for joining us today once again.
Kirsten, it's always a pleasure being.
Well, it's, it seems like everything these days is all about your credit, and in some form or matter, they're always referencing that credit score. It's my understanding that your capacity is at helping people either repair or inform them about their credit. That's kind of what you focus on. Maybe explain to our audience a bit, what the average day is like in the office down there.
Oh, our day is wide-ranging, anywhere from people recovering from a bankruptcy, trying to rebuild their lives and prove that whatever happened is behind them. Other people are here simply because they have errors on their credit report, accounts showing up on their credit report that don't even belong to them, or things that were paid several years ago which are still showing unpaid. All over the map, and certainly a need for what we do in a day, that's for sure.
Well, tell us more about the mighty credit score. It seems like companies like Equifax and TransUnion pretty much can control your financial destiny based on a simple number. Maybe elaborate a bit on that first.
Well, the credit score has become a very, very elaborate concept that pretty much every lender has adopted and every credit grantor has adopted. So you're pretty much at the mercy of what that score says. Whether it's right or wrong, you're still at the mercy of those magic 3 numbers. And in this day and age, credit is so important to do almost anything and everything. So it's very important that your score is accurate. And making sure that it stays accurate, because it can fluctuate literally on a month-to-month basis.
And how is that credit score actually generated? How is that number generated?
There's logarithms and synchronicities that are involved with every credit report, and certain things will affect it more than others, and other things such as inquiries, for example, when someone researches you. Every time someone pulls your credit, it's going to lower your score. If something falls behind and you haven't paid it on time, it's going to lower your score. The amount of credit utilization, so the amount of credit you use compared to how much is allowable, the percentage, will sometimes lower your score. And the opposite will increase your score. The less you utilize it, the more frequent you pay things. And there's so many different factors that go into it, and they convert into a score.
So what's a good score and what's a bad score then?
Scores range in the 300s right up to around the 900, but in real life, typically we see most scores, if they're really, really bad, are in the 400s, and people with really, really good credit will be up around the 800 mark. People with what I would say excellent credit is in the higher 6s and into the 7s. And that plays into some of the misconceptions of what people think is good and acceptable.
And so why is it so important to the average consumer to keep their credit score so high then?
Everything you do involves credit today. Absolutely everything. So what a credit score means to a lender is the difference of either A, approving you or not approving you, or alternative to that, do I give this client a 3% mortgage rate, or does this client get a 12% mortgage rate? Does he get a car loan at 6%, or does he get a car loan at 29%? Credit score sends a pretty strong message to a lender, credit grantor. Do we like this guy? What is the risk levels? And do we want to do business with this guy?
Yeah. And what about the myths? I'm sure there's a lot of advertising there about credit and improving credit. What are some of the myths about the credit score then?
Well, there's a few things. Is the credit score absolutely everything? No, it's not. But at the same time, it's what I call a shortcut for approval. So a lot of banks will have their systems hooked in to do what's called an auto approval. That allows the person who's sitting across from you to be nothing more than a data entry clerk, and the computer is going to decide based on the generated score. That doesn't mean everything else is going to be overlooked, because we certainly get a lot of people with really good credit scores, but they have all kinds of other mistakes on their credit, and vice versa. We have people with low credit scores who have perfectly fine credit. There's just lots of errors in the system. So, I mean, it's not the be-all and end-all, but it's pretty darn important in this day and age to have a good credit score.
So if that credit score is really high and you've got that great credit score, maybe outline some of the benefits of having that high credit score.
Well, I think everything comes down to getting approved when you need to get approved. And most importantly, I think it comes down to the interest rates you're going to get. A lot of our customers are trying to get car loans. They're trying to get mortgages. And the difference of getting being able to walk into a Ford dealership and get one of those interest rates at 2% or 3% versus having to deal with other lenders at 30%, the difference in payment alone, you're gonna pay for that car 3 times over, depending on the interest rate. Yeah. Now, in some situations where someone's got terrible credit, maybe it makes sense to take that lousy interest rate, suck it up for a year, work and improve that credit score so that, you know what, instead of it being something you're married to for 3 to 5 years, it's something that you're married to for 12 months. And that's what we coach people to do. If the only way to do it and the only way to get credit is by taking that kind of secondary rate, if that's what it's going to take to get you back on track, and as long as you can afford it, get the trade lines on your credit.
So finally, why is it essential then to actually solicit the help of a professional credit monitoring agency?
Well, there's 2 different types of credit monitoring that go on out there these days. The typical is what's advertised a lot around the internet. You're going to see monitor your credit, all these things you apply for, and they charge you a monthly fee, and then they send you a report, which is all fine and well, providing you have a background in credit, you actually understand absolutely everything that you're reading, and you also know and understand the logarithms and how credit can be synchronized and all those other factors of what will generate credit. Same thing if you don't know much about identity theft, reading your own credit report and knowing how things should be reported versus how they are reported, it's kind of useless. We've always had a more hands-on approach where we actually have humans who are trained in identity theft, trained in credit monitoring, who will actually work with you to actually make the things that will define your credit and help improve your credit score versus just letting nature take its course, which can be the slow way to improve your credit.
And, we have a viewer question that was just tweeted to our show. The question is from a mortgage seeker. He asks, I was on the Equifax website and I pulled my credit score before going to the bank to apply for a mortgage. When I got to the bank, I was declined because my credit score was too low, and it turns out we had 2 different scores. So how is that possible? Maybe you can help our viewer on that one.
Okay, it's very possible, and the reason is what people don't realize when they're pulling their own credit score. They're seeing, in this case, probably they pulled an Equifax score, where the bank may have pulled a FICO score or a Beacon score, or maybe they're using TransUnion. So there's various situations where they're going to see a different score. To make matters even more complicated, which is what I'm going to be doing right now, is a lot of banks will have their own internal scoring system, which takes the data from either Equifax or TransUnion or both in some cases and amalgamates it into their own risk model system. So a lot of times people are all excited, they're getting approved, they finally have a score good enough, and then they go and they're disappointed. And like I said, you're going to see scores all over the map, and probably best to work with somebody who knows and understands the different lenders and the different criteria, especially if you're applying for a mortgage.
So what you're saying is Equifax and TransUnion have completely different credit scores? Is that what you mean?
Absolutely. Their systems are sometimes they get completely different data. So you may have trade lines that show up on your Equifax that don't show up on your TransUnion. So and vice versa. So often you are going to see different scores, and different times are reported. Different trade lines are reported at different times. So you may have your credit utilization at different amounts on two different credit reports as well. So that's going to trigger different scores.
So, okay, so banks and lenders are simply getting different information depending on which system they're on.
Absolutely. And then, like I said, they will sometimes have their own internal score system, which converts the data into their own risk models.
So that leads to the next question. What's the difference between a Beacon score and a FICO score? And what other credit rating systems are there like that?
Think of it as a brand. One is Burger King, one is McDonald's, and yes, they're both hamburgers, and yes, they're both a score, and they're both reliable. They just calculate a logarithm slightly different. Typically, if someone has a 750 credit score, they'll usually not have a 540 credit score on the other system. They'll be similar, but not always reliable to say they're the exact same.
So, this sounds actually quite confusing. But first of all, for the average consumer out there, how are they going to figure this all out? Do you have any advice that you can maybe offer to simplify all of this credit rating system twist as far as the consumer is concerned?
Yeah, it's important to be diligent, and that's why we recommend credit monitoring to all of our customers. We like to stay on the beat and make sure that there's no errors and make sure that nothing's going to contribute to their score being lower or dropping when it shouldn't be dropping. So those are all the type of things that we do. But typically we get a lot of customers when their credit already is bad. They're recovering from bankruptcy and it's a matter of rebuilding them up. So we look for absolutely everything that will give them points, that will help them show the new consumer that they are, that whatever maybe was problematic is behind them. But it's important to be diligent on all fronts. You look at your Equifax and your TransUnion credit report. It's important to monitor them both.
Well, before we wrap up here, let's get to the most important part of the show, which is your tips. So, first of all, give us a few tips that can help everybody who's out there as a viewer.
Okay, I'll start right with our Credit Slab product. One of the reasons I designed that product is in order to help people boost their score. So let's talk about our trade secret. What do? We put trade lines, healthy, positive trade lines on your credit. We monitor them, we synchronize them, and we also monitor your credit so that no errors are going to show up on your credit. And if they do, they're fixed right off the bat. The trade lines are like loans, essentially. So when you make payments, you're showing that you have the ability to make these payments on time. So I guess tip number one would be always make sure you make your payments on time. Any lender, especially if you've had problems in the past, wants to see that you have the ability to change and you've made your changes and whatever problems you have are behind you. Pay your bills on time, always, no matter what, even if it's just a minimum payment, make the payments. And that's probably tip number one.
Tip number two.
Tip number two is be diligent. We do the monitoring because we want to make sure that if your score is going up, and it should be going up, that it stays going up. Monitoring and making sure your credit stays error-free. You would be amazed at how many people have other people's credits and trade lines and accounts, sometimes good and sometimes bad, on their credit report. Be diligent. Be very conscious of your credit report and watch it always.
Well, Sheldon, great having you on the show. Thanks very much for joining us on the program today.
Absolutely a pleasure.
We're speaking with Sheldon Wolf. He is with Canada Credit Fix. He is also involved in the Credit Slab. If you want more information, visit that website, creditslab.com. I'm Kirsten Kloss. You're watching iReports here on CNN.com. Thank you all for watching. Bye for now.